Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Overnight, the bearish streak now claims the second objective for the Australian dollar at 70.95 after posting a low this morning of 92. It is assessed that without profit taking emerging, could see further weakness towards 70.80 or even put 69.40.70 on the map. With any advances on the day, looks for the resistance at 71.55 to 65. Overnight, raising interest rates from the US Fed comments was quite substantial in terms of the sell-off with the US dollar rallying, with the Fed Chairman Jerome Powell warned of even further faster rate hikes in the future. Along with this is that we do still have the non-farm payrolls to come this week, which could increase the dollar strength further, which does support the view that we might be seeing a slip towards the lower region of 70 cents to 69.40.70 as I mentioned. Well, the euro got crushed overnight at 115.20.30 and with the level taken out now exposes the region of 113.70 to 75. Overnight rates were boosted by the release of a stronger than expected economic data, with the private payrolls increased by 230,000 in September. This is the most since February. According to the report from the ADP and the Moody's Analytics, economists had forecasted a gain of 185,000, but with the 230 has strengthened the US dollar. Now, the report is often seen as a preview of the government's non-farm payroll report, which is set, as I mentioned, to be released this Friday. The ISM non-manufacturing index reached its highest record level, according to the data released on Wednesday. The benchmark, however, for the US Treasuries for the 10-year traded to a high of 314, its highest level since 2011, with the 30-year bond also rallying to its highest level since October 2014. Now, with the dollar index posting a high of 95.72 and last traded at 95.65, a break above here would give further scope towards the region of 96 to 97, and this in terms won't see the low of 113.70 as a target, but more to the fact of 112.90 to 113.15. Resistance on the day seen at 115.10 and firmer above at 115.65.80. Well, the surprise of dollar yen recapturing the upside as the yield strengthened in the US claims the level of 114.10. Now, I'd like to point out that clearly from this RSI there is bearish divergence. I believe that the market above 114 will get caught in a bull trap and therefore could see the market plummet back towards the region of 113. Now, to get that move, we would need to see a break of 113.85. Which would expose the region of 113.40 to 112.60.75. Topside now looks at 114.65.75 as an intraday cap. The sterling still remains weak, and as you can see, is still falling towards that safety net that I called at 128.40.80. With the low overnight at 129.24, further pressure should come into play, and I do expect to see the market claim its target and reassess from there. From the technical implications, the MACD along with the RSI is in support of this decline. Resistance on the day seen at 129.19.95. The gold still going sideways and slightly cooled off from safe haven demand after the Italian worries isn't as strong as it was seen yesterday. Although the gold did rally $20 from 88 to 1,208. I do expect to see the cap still continue at 12, and from the recent pullback, a break of 96 would give further scope to the downside. Now, as some of you may know, I don't really have a strong view on gold until we get down to the region of 11.76, where I'm a buyer. So it's still quite a way off, but the way the market's been trading lately, it could get there quite easily. And to round off with oil, the fact is that the market has now challenged the upside. And from my concerns the fact is that there is still bullish implications from the broader picture, but the dailies is still questionable whether this market can sustain. It is posted an outside range day. There is some divergence here, so I do believe that I'm not a bull at these levels and rather either sit out and remain neutral for the time being and wait till I get the indication from the technicals to support a bearish case. But at this stage, market's still rallying on fears of the fact that the Iran sanctions that comes into play on November the 4th could put a bit of a shortage in the oil market. So this is why the bulls are still finding comfortable ground to take the market higher. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the rest of the day that's ahead.